Have you ever found yourself daydreaming about what it would feel like to have a portfolio worth 500K? And more importantly, what you would do once you've reached that milestone? It's an intriguing thought, isn't it? The kind of thought that often leads us to ponder the endless possibilities of what we could do with that kind of financial freedom. However, the journey to $500,000 in your portfolio isn't a walk in the park. It requires a sound strategy, a dash of courage, and a good deal of persistence. But what if I told you that many entrepreneurs have already paved the way? They've navigated the rough seas of financial markets, the highs and lows of business cycles, and have come out on top with portfolios that far exceed the 500K mark. They didn't just stumble upon this wealth, they built it brick by brick through smart investments, savvy business moves, and an unwavering belief in their financial goals. And you know what? You can too. It's all about having the right tools in your arsenal and knowing when and how to use them. But let's not get ahead of ourselves. The road to 500K is only the beginning. The real challenge begins when you reach that milestone. How do you ensure that your wealth doesn't just stay stagnant? How do you make your money work for you, so that with each passing day your portfolio grows and expands rather than dwindles down? That's the million-dollar question, isn't it? Or rather, the 500K question. But don't worry, we've got you covered. In this video, we're going to share 7 wealth tips that will help you navigate the complexities of managing a sizable portfolio. So, are you ready to take the leap and turn that 500K dream into a reality? Great, because we're about to embark on a journey that will change the way you think about wealth and investment. Now that we've got your attention, let's delve into the crux of the matter: how to manage and grow your wealth once you've hit the 500K mark. Before we dive into the tips, it's essential to understand the foundation of wealth building. It's like constructing a building. You wouldn't start with the roof, would you? The same principle applies here. The first brick in this foundation is financial literacy. It's vital to understand the basics of finance, such as the difference between assets and liabilities, understanding the power of compounding, and the importance of savings. I remember when I first started, I had to educate myself about these concepts. I read books, attended seminars, and listened to financial gurus. This knowledge is what helped me make informed decisions about my money. Next is investment. The reality is your money needs to work for you. That means putting it in places where it can grow, like stocks, bonds, real estate, or even a business. Remember, you're not just saving money, you're growing it. Last, but certainly not least, is diversification. It's not enough to just invest. You need to spread your investments across different asset classes. This way, if one investment doesn't perform well, others can offset the loss. I've experienced this firsthand. There were times when some of my investments underperformed, but because I had diversified, my overall portfolio remained stable. With the groundwork laid, we're now ready to explore the 7 key tips for managing a 500K portfolio. First on the list is diversifying your portfolio. Now, what does that mean? Diversification is a strategy where you spread your investments across various assets. Imagine having an array of fruit in your basket rather than just apples. The variety not only offers a tastier experience, but also a safer one. If one fruit goes bad, you still have the others to savor. Let's bring this back to your portfolio. By diversifying, you're investing in different sectors, different geographic regions, and different types of securities. This way, if one area experiences a downturn, the other parts of your portfolio can help offset these losses. I can tell you from personal experience, diversification has been a game changer. It has helped me weather financial storms and come out stronger on the other side. So, as you move forward with your $500,000 portfolio, remember this golden rule: diversification is the key to mitigating risk. The second tip, and perhaps the most crucial, is investing in yourself. This means nurturing your mind and skills, setting aside time for learning and personal growth. It's about acknowledging that knowledge is a powerful asset, and like any asset, it needs to be cultivated and grown. Consider how your own quest for knowledge and development has shaped your financial journey. Maybe it was a personal finance book that first sparked your interest in wealth management, or perhaps a seminar that introduced you to the concept of diversification. These investments in your personal growth have had a direct impact on your financial growth. Remember, your mind is your most valuable asset. It's the tool you use to strategize, to make decisions, to identify opportunities. So ensure you're regularly feeding it with new information, skills, and perspectives. Investing in yourself isn't just about improving your financial situation. It's about expanding your world, growing as a person. It's an ongoing process, one that doesn't end once you've reached a certain financial milestone. Investing in yourself is the investment that pays the highest dividends. Tips 3 to 5 involve seeking professional advice, practicing patience, and staying informed. Let's delve into these, shall we? First up, seek professional advice. As your portfolio grows, so does its complexity. Navigating the world of investments can be like sailing in uncharted waters. It's always wise to have an experienced guide, a financial advisor, to help you steer clear of potential pitfalls. They can provide valuable insights and strategies tailored to your specific financial goals. Remember, even the most successful entrepreneurs lean on experts to help manage their wealth. Moving on, our fourth tip is to practice patience. Rome wasn't built in a day, and neither will your wealth. Investing is a long-term game, and it's essential to remain patient even in the face of market volatility. It's easy to get caught up in the thrill of quick profits, but it's the steady, patient investor who ultimately reaps the rewards. As the old adage goes, the stock market is a device for transferring money from the impatient to the patient. Lastly, but by no means least, is the advice to stay informed. The financial world is ever evolving, with market trends shifting and new investment opportunities cropping up all the time. Make it a habit to stay updated on financial news and market trends. Learn about different sectors, understand global economies, and keep an eye on emerging technologies. Knowledge is power, and in the world of investing, it can also be profit. Now, a personal note. In my own journey, I've found these 3 tips invaluable. Seeking professional advice gave me a fresh perspective on my portfolio. Practicing patience taught me the virtue of long-term investment, and staying informed helped me make informed decisions that paid off handsomely. So, to recap, seek professional advice to navigate the complex world of investments, practice patience in the face of market volatility, and stay informed about the ever-evolving financial landscape. These 3 tips are your compass in the journey of wealth management. The final 2 tips are about the mindset. Don't let emotions drive your investment decisions, and always keep a long-term perspective. Let's begin with the first mindset tip. It's human nature to react to situations, especially when they directly affect our finances. But here's the thing, the world of investment is not a place for knee-jerk reactions. It's easy to get swayed by the highs and lows of the market, but letting your emotions dictate your decisions can lead to hasty and often regrettable actions. I've been there, and trust me, it's not a pleasant experience. Remember, investment is a game of strategy and patience, not emotional reactions. And this brings us to the second mindset tip, which is to always keep a long-term perspective. It's all too easy to get caught up in the daily fluctuations of the market. But the truth is, these daily ups and downs are just noise in the grand scheme of things. The real game is in the long run. The most successful investors are those who have the foresight to look beyond the immediate picture and focus on the long-term potential. I've learned this the hard way, and I can tell you, it's a lesson well worth learning. In conclusion, while it's important to be proactive in managing your investments, it's equally crucial to maintain an objective, emotion-free approach and keep a long-term perspective. Remember, a clear mind and a long-term perspective are your best friends in managing a 500K portfolio. We've covered a lot of ground today, and I hope you found these insights valuable. From the foundation to the pinnacle, we've journeyed through 7 crucial tips for managing and growing a portfolio once it reaches the $500,000 mark. Let's take a moment to revisit these essential tips. First, we discussed the importance of diversifying your portfolio. Casting a wide net across various asset classes can help mitigate risk and potentially enhance returns. Next, we emphasize the idea of investing in yourself. This might mean furthering your education, honing a skill, or even pursuing a passion project. Remember, you are your most valuable asset. We then dived into the trio of tips 3, 4, and 5. We highlighted the value of seeking professional advice. Financial advisors can provide objective guidance and help you navigate complex investment landscapes. We underlined the virtue of patience, reminding you that wealth accumulation is a gradual process. And we stressed the need to stay informed. Keeping up to date with market trends and economic news can help you make informed investment decisions. As we neared the end, we explored the last 2 tips. We talked about not letting emotions drive investment decisions. Market volatility can stir emotions, but it's crucial to stay level-headed and stick to your investment plan. Lastly, we advocated for keeping a long-term perspective. Short-term market fluctuations are less significant when viewed in the context of a long-term investment strategy. It's my hope that these 7 tips will serve as a guide on your financial journey. They're not just tips, but strategic tools to help you navigate the world of investing once your portfolio hits that significant 500K milestone. Remember, wealth management is a marathon, not a sprint. So, take these tips, apply them, and watch your portfolio grow.